Well, folks, the time has come to speak about this stock market, which seems like a disillusioned market right now. We have stocks crashing all over the place. We have some markets at near all-time highs. People are like, what's going on here? So I said, let's do a dedicated video to this here today. Hope you guys enjoy this as always. All I ask in return is you smash that like button. That's literally it, okay? Boy, do we have a lot to get into in this video, okay? So, meme stocks. Let's start out right at the top with meme stocks. What a way to start this video, okay? Meme stocks. I mean, if you look at these stocks, I mean, they're all down 50% plus from their 52-week highs. Some of these are down 70, 80% from their 52-week highs. Starts out, obviously, AMC, 72 plus, 52-week high. It's at 33 here today. BlackBerry, 28.77, 52-week high. It's $9 here today. Look at Wish stock. Oh, man, has this one been hit, right? As I say, $32 or $22? Whatever it was, it might be $32. It's now at $6. Regardless if that's $22 or $32, it's been awful for Wish, right? Down, what, 70, 80% or so. You look at GameStop, 483 was the high. It's $152 here today. Clover Health, this one got grouped into that bunch, $28. It's $7 here today. Fubo TV, $62. It's $25. The meme stocks, obviously, and there's a lot more meme stocks than that. That's just some of the ones that come to mind when I think about some of the meme stocks. Man, it's just been tough sledding. Meanwhile, not just the memes, right? The popular, let's call it YouTube stocks, including ones I speak about on my channel, have been in tough sledding lately. Tattooed Chef, they reported 46% revenue growth last quarter, 62% branded revenue growth last quarter, and look what has happened to that stock. Just off the cliff, straight down to, well, we know where it fell down to, okay? Look at Corsair Gaming, 24% revenue growth they reported a couple weeks ago in their earnings, and that stock has done nothing but downtrend to new pretty much 52-week lows, it seems like every other day, right? Obviously, Tesla reached a high earlier this year of 900, and since that time, it's basically just been a floundering stock. It moves up, it moves down, and it really doesn't go any dang where, and all of a sudden there's a little hope around it, and then it just goes right back down, right? And it seems like it's just going to be kind of caught in that situation for a while. You look at TDoc, Teladoc Health, stock Cathie Wood loves. Look at this stock. It reached highs of $300+ back in February. It's $135 a share here today. If we go to CathieWoodStocks.com, which tracks their top 25 investments on a daily basis, we see Teladoc is her number one stock, and Tesla is her number two stock. Tesla's her number one, Teladoc's number two, and look what's happened to both those stocks. Tesla's, obviously significantly down since February, and it's just floundering, and Teladoc's just been a disaster for the past, several months. After that high was reached at 300, it's just been in a downtrend, vicious downtrend, and those are the top two stocks for ARK Invest and Cathie Wood there, right? Then you have obviously the Coinbase IPO earlier this year. Obviously very hyped, very talked about, and where has that stock gone? It's obviously just pretty much gone down, right? 429 was the high. It's $248. That's one of the most known, if not the most known, crypto brokerage out there. Obviously, Hood goes public a few weeks ago, and it started out rough. Then all of a sudden the stock roared, and basically this stock has fallen right around 50% in the past 2 weeks. After hitting that high, intraday high of $85, it's $44, so almost 50% in a matter of 2 weeks versus where that high was reached. And this is a stock that is interesting for a couple of reasons, right? Obviously, there's a ton of retail folks that use Robinhood. And so that makes it kind of interesting. And then on top of that, it's in that fintech space. And man, it's just, it's an interesting one to watch. I have no interest in being short or long Robinhood. But man, is that one, been in some trouble. You look at the Chinese stocks. My gosh, Alibaba hits a new 52-week low. All the Chinese stocks are just in such a vicious cycle right now. I can't even think to touch any of these stocks. Not because they're downtrending as far as the stock price goes, just because of the real fear around, delisting of these stocks, what China is going to do. I mean, there's so many fears and real fears around these Chinese stocks, and it's just hard to see, like, when does this finally end? When does it get better? Does it actually get better for these stocks, right? And Alibaba, I love Alibaba's underlying company, but I don't trust the whole situation, what's going on between the different governments right now. And even China has come out against these big tech companies in China recently and making them look real bad. So it's a tough situation. And I love Alibaba's business model. I'm a big believer in it, but I can't own the stock because I have no clue if all of a sudden tomorrow they're going to be like, oh yeah, we're delisting these guys from our stock exchanges. It's scary. Obviously, Baidu, one of the more popular Chinese stocks as well. Look at this one. It's $137 here today from 354 to 52-week high. I mean, these stocks have just gotten devastated. Tencent is getting close to being down 50% from its 52-week high. Obviously, China has some pretty harsh words around gaming, and especially kids in gaming, and comparing it to some pretty bad stuff, right? So, those Chinese stocks just getting devastated. And so, we just went all over all that, right? And I could have pulled up a ton more stocks. The Chinese stocks, meme stocks, high growth stocks, volatile stocks, all seem to be getting absolutely destroyed. Small caps getting destroyed. And yet, look at the S&P 500. It's near its 52-week high. Like, what is it, 1%? Maybe, what is that? It's like 1% roughly away from its 52-week high. Based upon if you had no clue about the stock market and all I did was just show you all those stocks we just went through, you would think, oh man, the market must be having trouble. Not really. The big guys are doing just fine. The big American corporations are, as far as the stock prices go, are looking great. We're very, very close to a 52-week high, which a 52-week high, by the way, is an all-time high in the history of S&P 500. And so this is where this disillusion starts coming in of what's going on in this market. And I'll tell you exactly what I'm doing and what I plan to do, but I can understand the disillusion in the market when you see that type of devastation we just went through, and it's like S&P 500 is at almost an all-time high. What's going on here? The Dow 30, the Dow Jones Industrial Average, within a few percent of an all-time high. So the fact is, large cap stocks, maybe even mid caps, but especially large cap stocks are doing great. And American companies, for the most part, as far as their stock prices, are doing great. But then you have stuff like this, right? Michael Burry, he says, we're on the brink of a collapse. He said over the last few months, all these stocks are bubbles. And but specifically, he spoke about meme stocks and cryptocurrencies when he spoke about that. Now, the question is, does Michael Burry still feel like that? Does he still feel like all those stocks are going to crash more? Because obviously, we just looked at all the stock prices. Every single one of them has collapsed. It doesn't mean they can't collapse more, but every single one of those stocks has collapsed. So does he think it's going to get a lot worse from here or better? Things like that. And so this is very, very important to kind of keep in mind. And this kind of leads to more worries about what could happen here. Michael Burry, the guy that got famous from that movie about the real estate market, he's short in ARK funds now. What's going on here, right? But then, not sure if you guys saw what happened on the Hungry Bowl today. Top story today. Cathie Wood says there's no bubble. She says there's no bubble out there right now. As far as her specific words in the newsletter, Wood has to say this about the situation. In a bubble, this is her quote, in a bubble, and I remember the late 90s, our strategies would have been cheered on. You remember the leapfrogging of analysts making estimates one higher than the other, price targets one higher than the other. We have nothing like that right now. In fact, you see a lot of IPOs, SPACs coming out and falling to earth, essentially, right? We couldn't be further away from the bubble. And I thought this was a great comment by her. And it makes a lot of dang sense. Look at the Robinhood IPO. Does that look like an IPO that's in a healthy spot when it's down almost 50% in the past 2 weeks? No. Look what happened to Coinbase. Look where that stock went and look where it is at now. Yeah, and SPACs have slowed down in a massive way. We're not in one of those hot markets right now. You want to talk about 6, 9, 12 months ago, 100% different. We were absolutely in one of those markets. But today, nah, look at the facts. Look at the numbers. Run these stocks. Look at where they've been ranging recently. No, we're certainly not in one of those right now where everybody's just, euphoric. Like I said, 6, 9 months ago, we were in that spot. Yes, we were. But today, I definitely don't feel like we're in that spot, right? You want to add more to this, disillusion in the market? Pull up Yardeni Research and look at Ford Pisa stocks, right? S&P 500 large caps are trading at a 21, which is obviously significantly high. You have to go back to maybe 2002 to see these sorts of ranges for S&P 500 large caps. Meanwhile, mid caps much more reasonable at a 17. Okay, you can go back to 2019 and we were there, right? Much more reasonable. And then the small caps, the ones that keep getting destroyed, actually are not bad valuations at all. At all. So where I'm looking, obviously, over the past few months is small caps, because this is where the real opportunities are. And at some point, things will turn. And this leads to more disillusion in the market, because usually, if you're in a situation where the large caps fall, so let's say the S&P 500 falls. Let's say a lot of these big tech companies fall, right? Amazon falls 10%, Apple falls 10%, Google, McDougal falls 10%, FB falls 10%, Microsoft falls 10%, Nvidia falls, Tesla, Myesla, all these stocks that are the huge companies, Netflix, let's say they all fall 10%. Usually that would bring small caps down another 20, 30, 40%. But I see a different situation playing out here if, and this is a big if the large caps were to fall. Because the fact is, if large caps are falling, that means funds, and especially actively traded funds, are selling out of those stocks. Now, the thing you got to understand about actively traded funds is if they're selling out of stocks, guess what? They have to invest that money somewhere else. As an actively traded fund, you don't get paid to just have money sit on the sideline. And so if you're going to say, I'm selling, let's say, $50 million of Microsoft tomorrow, okay, you better put that $50 million somewhere else and do it real dang quick. And so what I think could end up playing out is if, and the big word is if, we did actually see rotation out of small caps, I think we'd see a different situation than we've seen in the past, where usually you would expect these stocks to get devastated. I think there would actually be a rotation of money. And you got to understand, when that money rotates, it moves those small caps in a massive way. And people think every market's the same and it's always going to act the same. And I can promise you that couldn't be further from the truth, okay? Every single time people think it's going to be, it's the same way it's always been done. No. There was not a soul. In March of 2020, there was not a soul on this planet that could have predicted we would be at stock market all-time highs by the end of the year, right? Not a soul on this planet. And yet we were. And so this is where it comes in, and you got to really think about these things and run these things through. And you can't assume that, it's happened like this in the past, where if large caps sell off, the small caps sell off 2x, 3x, 4x more. I don't see that playing out this time because we're in a very different scenario. Usually when the market's running hot, S&P 500's at all-time highs, guess what? Small caps are running ridiculously hot, insanely hot. And we couldn't be further from that situation right now. So I can actually see a potential where if these guys sell off, the money rotates here, and then these stocks pump huge. And you know why? Because the money coming out of that is big money. And if it's going to flow into these guys or even these guys, the moves can be insane, right? Now, more to this disillusion situation and craziness, you have folks saying inflation is out of control right now, right? And let's keep in mind, Wall Street has been late to recognize inflation. This is something I've been talking about for 3-6 months now as far as inflation getting out of hand. Wall Street's finally really picked up on this in a major way over the past, let's say, month, okay? And now you can't miss inflation talk, right? But where I think things are going to get interesting is I think inflation's about to slow in a massive way. Maybe not this quarter, but in 4Q. And I don't know if I'm quite ready to predict deflation in 2022. I don't know if I want to go that far yet, but I'm definitely leaning toward the side of close to deflation or a very, very slow rate of inflation in 2022 versus what we've had. And I don't think the market's even thinking about that right now and how that's going to play out in stock prices and overall fundamentals of companies. Because absolutely, the inflation is hurting a lot of businesses, especially with transportation of products. I remember I was on the Corsair conference call several times. I've listened to that thing now. And the CEO specifically called out container rates being 3x to 4x, guys. 3x to 4x for a container, a shipping container. You flip my flapjacks. That's ridiculous versus what they were paying 2 years ago. There's no doubt inflation is out of control. And there's no doubt that is completely unsustainable and that will end, right? Now, the issue we have, especially when it comes to folks that are retail investors in this market, right, is folks got so used to this crazy uptrend we went in the market, right? From basically the bottom reached in March all the way through the beginning of this year. March through March. And folks saw what happened, and they're like, kind of got trained, especially if you're newer to the market, you got trained that you got to buy every dip in sight as fast as possible. Doesn't matter. It dipped 2%, buy. 2%, buy. And what happened is a lot of retail investors have blown through their money already. And so as these stocks are dipping and dipping, they don't have money to buy on these dips, which is unfortunate, right? But you get trained when you're in that type of upcycle that any dip is a buy. Look at this. I mean, literally any dip along the way, if you bought, you made crazy money, right? That market is unsustainable. That's not how the stock market works every year, right? And so you have to be a little more patient in kind of getting in these deals. And the experienced investors understand this. So, if the stock market dips 2%, 3%, or their favorite stock dips 5%, they're not all in right away, right? I put every dollar in, I got nothing left, right? That's a very, very bad situation to be. And so for anybody that's watching this that maybe found themselves in this situation, learn from this in the future. I got caught into a cycle like this in 2014, 2015, and around margin all at the same time because I had so much success in the market, and it had been pretty much a market where you need to buy every dip in sight. And so as soon as I got a 5%, 10% sell-off, I was all in. I was all in. Can't go any lower, right? Because you get trained like this. And then guess what? The dip dips, and then the dip dips again. And all of a sudden you're like, I can't buy because I have no money. It's rough, and it happens, and it will happen again. Next time we have a really hot market, which, who knows, maybe it's 2022 we have a really hot market, maybe it's 2023. We'll have to see what happens with that. But it will happen again, okay? You can't prematurely go through all your money. Let's just call it that, okay? Now, on the flip side, we got a whole other situation. I called this out on Millennial Money the other night. Kevin and I got into an argument in Millennial Money where he's basically saying he doesn't want to buy any stocks until he sees real panic in the market, things like that. And to me, that is getting too picky around stocks, like way too picky. At the end of the day, if you see great deals that you love, you got to take advantage. You can't kind of say, well, I don't see enough fear, things like that. Otherwise, you get caught into the other situation. You have FOMO in the market, right? FOMO is like you got to buy every dip in sight, right? Then you have the opposite of FOMO. And that's what I'm definitely seeing from some folks out there now who think, they're falling, so they're just going to fall another 5%, 10%. And you could be right, but the problem is, you're going to end up likely missing the bottom. The uptrend will start. You'll think it's going to go down again, and then it doesn't go down, and then it goes up more and more and more, and then you're stuck in the situation of limbo. Like, do I jump in? Do I turn into a bear? And I can tell you, man, there's been a lot of permanent bears, some perma bears that have been made in those situations. Not fun. So you also don't want to get too picky in this type of market, right? There's another issue I'm seeing. January, February, and I saw it out there in the retail investor community. Everybody thought they were the next Warren Buffett. There's no dang doubt about that in January, February. The confidence was off the charts, borderline cockiness, like newer investors to the market. There was plenty of them that thought they knew it all because they got great returns. And if you're not self-aware enough, it's very easy to all of a sudden think, I've only been doing this a year and I'm getting better returns than this guy and this guy. I'm the best. We had that situation, way overconfidence, and now I'm seeing an exact opposite situation where now I'm finding investors with no confidence that are seeing these stocks go down and are now like, they feel like they don't know what they're doing. They don't feel confident to buy in these stocks. They think, these downtrends are going to continue forever. And so we went from this overjoyous, unbelievable levels of confidence to now there's no confidence in the market. And I'm seeing a ton of folks. I read comments every day on the YouTube channel. I go through them, man. You might think I have too much going on to read YouTube comments. Believe me, I try to dedicate at least 10 to 20 minutes a day going through YouTube comments. And there's no doubt in that 10 or 20 minutes I spend going through YouTube comments, there's no doubt I see a lot of folks like scared. I don't know, Jeremy, I know these stocks are going down, and I'm just telling you that is so much of a different vibe than we had 6, 7, 8 months ago. It's like night and day, right? And so you got to have that dang confidence. Okay, what am I doing? Okay, first thing is I'm not getting down about this market. If these stocks want to keep going down, okay. If Tattoo Chef going to go down another 10, 20%, Corsair is going to go down another 10, 20%. I'm not going to predict that, but if that happens, I'm ready for it. I love deals. And actually, I'm not nearly as scared in this sort of market as I was back in January, February, when everything was at all-time highs. The euphoria was through the roof. It was about, any 1% down, go all in. Man, options, calls, short-term calls, buy next month calls. It got scary. That type of market scares me. This type of market, I'm fearless. I'm ready for it. Give me the deals. I'm ready to see all stocks down 10% tomorrow. I'm ready for it, okay? This type of market doesn't scare me nearly as much, right? What am I doing? I'm buying. Clearly, if you follow my channel a lot, you know I'm buying. I'm covering it almost on a daily basis. I'm buying. I'm not being too picky. I'm not like, well, it could fall another 3% tomorrow, so I won't buy today. No, man. It's not how you do this game. If you see great deals on stocks you love, you buy the dang stocks. The whole don't catch a falling knife thing. No, that's such BS, man. I will gladly catch falling knives all day long, okay? And if they slice my hand, I'm good with it, okay? Because at the end of the day, I need that knife. Okay? That's all I know. I need that dang knife, and so I'm going to catch it. And if it slices my hand, it is what it is. Other people are worried about slicing their hand. Meanwhile, what's going to happen is the knife's going to fall on the floor, and they're never going to pick it up. And they're going to need that knife, okay? Number 3, I'm keeping some dang cash ready. I always keep some cash ready. Always try to keep 10 to 30%. 30% is when the market's near euphoria levels, right? And I definitely got up to those levels January, February. And right now, my cash levels are definitely going down. There's no doubt because I'm buying heavily. But I absolutely am keeping some cash ready. I'm also keeping margin money ready, right? I've definitely got plenty of margin I can do out there as well. It's at a 1.55% interest rate. Now, I would say most investors don't play around with margin, okay? Just don't. That's all I'll say about that. But I'm keeping that ready. I got cash ready. I got margin ready. And I am fully ready to buy 2024 calls when they come out. I'm going to be looking over those heavily in September, October. Once again, probably not the best thing for newer investors to play around with. I've been doing this game for a long dang time. So, that's what I'm personally doing out there in the market right now. If you're looking to download literally every single thing I know about making money from stocks, basically stock picking, running portfolios, value in stocks, all those sorts of things, you want to download it all from my brain directly to your brain, check out the pinned comment down there. That'll be to apply for the private stock group, private Discord chat, take your level 2 of investing up to the next game, and hopefully get some dang confidence in yourself and know what you're doing out there in the market, which is obviously very important. Much love as always, guys, and have a great day.